Okay, part two, preparing a post-closing trial balance. So we finished, we've closed out all of our temporary accounts, our income, our expenses, our drawing. Now we're ready to move forward. We're done with the accounting cycle. We're ready to move into our next fiscal period for the next month in this case. However, we need to check one more time that our debits equal our credits moving forward, because if not, things start unraveling. So it's doing that, being consistent and doing the same thing every month. Very important. Okay. So here are all of our posted general ledger accounts. Let's go back and look at, we have our permanent accounts, our assets, our liabilities, our capital account. They all have balances moving forward into the new fiscal period. You can see all these balances here, credit balance for liability and capital and accounts payable, debit balances for all my asset accounts. All looks good. Now notice how we've drawn double lines through the debit and credit areas on the ledger for all of the temporary accounts. So there's drawing, income summary ended up with 0, correct? Let's see. Here's my sales, my expenses. They all ended up with 0 balances, and we put double lines in there to show that the balance has not been omitted, because if we just let that blank, somebody would think that we'd made a mistake. The balance has not been omitted, but we're zeroing out all of those temporary accounts. Okay? And again, it's so important to make sure that moving into the next period, before we can say we are done with this accounting cycle, this particular month, that we make sure our debits equal our credits. Now, this document that we're talking about, the trial balance prepared after the closing entries are posted, is called a post-closing trial balance. Okay? Okay. I'm not going to talk about that. All right. And again, post, of course, means after. After posting, after we're done posting, we're going to do a trial balance to take us into the next period. And this is pretty straightforward. So here is our post-closing trial balance. These are all permanent accounts, assets, liabilities, and capital. Kind of goes back to chapters 1 and 2, like just the basics moving forward. There's no income statement accounts. There's no drawing. It's just pretty plain and simple. So again, this is our document. We're going to head it up with post-closing trial balance. Who, what, when. Who is the company? What's the document? When is the date? There's our account titles over there. Our account balances, debits, and credits. Single rule. Compare totals. Put the word totals in there. Record the totals. Double rule. Just like we did with the balance sheet. Just like we did with the income statement. 8-step process. Okay. And that's pretty much all there is to it. Okay. Series of accounting activities, including recording financial information, is called an accounting cycle. So again, we've done all this accounting work, if you like, in this period of, in this case, January. We're calling that our accounting cycle. From the beginning of the month to the end of the month is our cycle. We're going to start a new cycle with the next fiscal period. In this case, it'd be February. And here are the 8, and you're going to see this on one of your questions in MindTap. The 8 things, and you have to go in. There's a question that's going to ask you to prioritize, and by chronological order in time. So we analyze transactions, step 1. We journalize those transactions, step 2. Then we post them to the ledger. From our ledger balances, we prepare the worksheet like we did in chapter 6. We then journalize and post adjusting entries like we did for supplies and insurance, accrual basis accounting, matching up expenses with revenues, prepare the financial statements like we did in chapter 7, journalize and post closing entries like we did in 8.1. And now here in 8.2, we're preparing the post-closing trial balance. Why are lines drawn in both the balance debit and balance credit columns when an account has a zero balance? Little review here. To assure reader the balance has not been omitted. We didn't forget. We're making very deliberate to show that there's a zero balance. Which accounts go on the post-closing trial balance? You should be able to be very familiar with this because these are permanent accounts. All of our temporary accounts we closed out, and they've got those lines through the debit and credit balances. Only the permanent accounts move forward into the new period. Otherwise, like we said in the last lesson, if you let your sales account end up with a balance into the new period, how are you going to know what February's sales are if you don't start out with a zero balance? That would be a temporary account. Only the permanent accounts will show up on the post-closing trial balance. Why are temporary accounts omitted? They've been closed, first to income summary, then income summary rolled up to the capital account. They all have zero balances. They have no use in the post-closing trial balance. So we're going to go to Mind Tap, Working Papers 8.2. Gotta make sure my video is still on here. So I kind of lost it here. There it is. Just kind of had a momentary what's going on here. Okay, 8.2, work together. So it says the list of accounts shown here is taken from the general ledger. Fix it now. Indicate which of the accounts will appear on the company's post-closing trial balance. Check all that apply. Only permanent accounts. Cash, petty cash, accounts receivable, supplies, prepaid insurance, all of my assets with debit balances, accounts payable, Connor Whitney Capital, all of my accounts with credit balances. Again, we're going to prove the debits equal credits moving into our new fiscal period, moving into our new accounting cycle. All the other accounts down here would be temporary accounts, and they have zero balances. Really quite that simple. Okay, next step. Okay, we're going to create our post-closing trial balance. Again, who, company name, what, document name, when, the date. Let me see here. I'm going to put this, I'm going to pin this up here. Okay. Cash, 4,900. Petty cash, 75. Accounts receivable, 1387. Supplies, 75. Remember, we recorded an adjusting entry, to show supplies used. Same thing with prepaid insurance. We did an adjusting entry on that too. End up with a balance of 250 for our unused insurance. Accounts payable, Southside Supplies, $267 credit. And then Connor Whitney Capital, after we roll up our income summary of 677 credit, reduce capital by our $1,700 draw, we end up with capital of 6,420. Totals. Okay, now I'm not going to just sit here and do math in my head. I'm going to pull my Excel spreadsheet up, my calculator, 4,900 plus 75 plus 1387 plus 75 plus 250. My 5 items in my asset or the debit side, they total 6687. My liability of 267 plus my Connor Whitney Capital 6420, they total 6687. Excuse me, 6687 debit, 6687 credit. I've proven that my debits equal my credits. Okay? That's your post-closing trial balance. Probably the simplest of all of our financial statements. How'd we do? Nailed it. All right, looks good. Okay, so you'll now go on and do your own. Same deal, identify your permanent accounts, then prepare your post-closing trial balance for Repair World. Enjoy, and we're going to move into a new fiscal period now. Actually, we're going to start a whole new unit is what we're going to do. Take care.